Today, we're diving into something every Texas agent needs to understand: VA loans, what they are, and how they impact the TREC contract. Whether you've worked with veterans before or not, this info will help you serve those who have served us. And I got a call about it this week. The agent had a VA buyer, and the appraisal came in at $45,000 less than the sales price. The seller asked her listing agent if she would be entitled to the earnest money, since it took the lender so many weeks to come back with the appraisal. They assumed that the delay was related to some repairs needing to be done on the house that came up at inspection. The seller paid a good chunk of money for those repairs and wanted to see if she could get the earnest money. Unfortunately, the buyer has up until closing to terminate based on the appraisal and VA loans. We will talk about that, but let's go back and talk about VA loans generally. VA loans are zero-down home loans backed by the Department of Veterans Affairs. They are a powerful benefit available to veterans and active duty service members, and even some surviving spouses. But here's what's the key for you as the agent. There are specific protections built into the VA loan process, and you need to know how those tie into the TREC contract. Let's talk about two major VA requirements that impact a contract. First, zero down payment. VA buyers can finance 100%, but they cannot be forced to pay non-allowable fees. That means you may need to negotiate for the seller to cover some of those costs, or you'll need to adjust the deal elsewhere. And two, the VA escape clause. This is big. It states that the buyer can't be obligated to close if the property doesn't appraise for the amount specified in paragraph 4 of the third-party financing addendum. Of course, if they want to close and come up with more cash, they can. However, the contract states, if the above financing described involves FHA insured or VA financing, it is expressly agreed that notwithstanding any other provision of this contract, the buyer, the purchaser, shall not be obligated to complete the purchase of the property described herein or incur any penalty by forfeiture of earnest money deposits or otherwise. 1. Unless the buyer has been given, in accordance with HUD, FHA, or VA requirements, a written statement issued by the Federal Housing Commissioner, Department of Veteran Affairs, or a direct endorsement lender setting forth the appraised value of the property of not less than blank dollars, or 2. If the contract purchase price or cost exceeds the reasonable value of the property established by the Department of Veteran Affairs. The 3-day notice of termination requirement in paragraph 2B does not apply to this paragraph 4. In other words, if it doesn't appraise for the amount specified in this paragraph, the buyer can terminate all the way up until closing and still get their earnest money back. Now, the third-party financing addendum also says that if VA financing is involved, the buyer elects to complete the purchase at an amount in excess of the reasonable value established by the VA, buyer shall pay such excess amount in cash. It also states that the seller may reduce the sales price to the VA reasonable value, and the sale will be closed at the lower sales price. So in the realtor's question about where the property appraised for $45,000 less than the sales price, it is at the buyer's option with a VA loan to close at a higher price, paying all cash for the difference, but buyer doesn't have to. Or, if seller reduced the price to the VA approved value, buyer would have to buy. Without either option, buyer would have the right to get out of the contract and get their earnest money back. It is important that you as a listing agent let your seller know the impact of VA loans prior to signing a contract with such loan. And as always, if you have an idea or a tip for Tip of the Week, please email tipoftheweek@allegiancetitle.com. See you soon.